Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, we will try to understand where we have the highest probabilities for a potential move on this pair. And the way in which we will be doing that is first, analyzing the pair from a technical perspective. Then we will go and see what we have when it comes to the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's go straight to the charts. In today's video, I want to speak about GBPJPY and as usual give a complete multi-time frame analysis. Now, starting here from the monthly, what we can see is that at the moment we have just tested and started to reject a very strong level of previous monthly resistance, which was resistance here, and again here, which after the market broke to the upside with this impulse was turned support here. So at the moment, from a monthly perspective, we're testing previous monthly resistance turned support, and we have also already started to reject it to the upside. Now, as usual, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced exactly to the 0.618 golden ratio of the Fibonacci taken on this monthly impulse, which is a very strong level of monthly support and demand, which we did expect the market to test and then to start to reject to the upside. So here on the monthly, what we could expect is more potential monthly bullish continuation. Dropping down on the weekly time frame, what do we see? Now here on the weekly, we can see that we're testing monthly demand and support. In fact, by looking left, we can easily identify how all this wick here, the massive wick of this red candle here, shows that all this area is actually very strong weekly demand and support. In fact, when the market was melting to the downside, immediately that selling pressure got absorbed with new buyers getting in, pushing the price higher, meaning that all this area is actually strong support and demand, from which a potential rejection higher definitely is a possibility. Now, if we go down on the daily time frame, what do we see? Now, from a daily perspective, we can see that in melting to the downside inside of that weekly support and demand, the market has also started to create this M pattern. And in general, after the creation of an M pattern, what we would like to see is for the market to provide a potential rejection to the upside to go and complete the pattern itself at the previous support and resistance, which is the neckline of the pattern. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing, and we check the data for the pound. On the pound, we can see how we went from minus 80 to now minus 53k net positions, with 6.7k longs added with the last report and 3.4k shorts getting closed, making the pound quite strong. And the strength of the pound and weakness of the JPY is exactly what we need if we are to create a reversal to the upside. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for this potential rejection higher for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can now access completely for free. In fact, the link is in the description, and I really suggest that you go and check it out because you can learn all the rules of the strategies and you will find a lot of valuable content inside of it. Now, if you enjoyed this video, also make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.